Hey there, good afternoon everyone. Trader Tim from eMoneyMind.com doing a trade recap video for the week. Today is June 7th, Thursday, 2018, and pretty great week of trading. Really, aside from Monday, we had this very tight range-bound day. We did have a nice little gap up where we broke these two swing highs, so it was significant in that respect. But really, the entire day on Monday was just encompassed inside of the first 30-minute high and low. And whenever that happens, it's a pretty uh, strong sign that you want to be conservative because the candle itself, yeah, it was about 10 points wide, but there just really was not much playable activity. As we look to Tuesday, Wednesday, Thursday, we can see, it wasn't just a straight up move. We had some nice little pullbacks along the way, and there were some really great trading opportunities that I want to run through here today. Before I do that, you notice I got this line drawn up here, and that's just kind of the next swing high, if you will. So we are approaching 27.89.75. That's the swing high from back in the beginning, middle of February, and then one last swing high before all-time highs here in the ES. If we look to this little long that I have drawn up, we didn't trade all the way down to the 50% long, but I've drawn it up just as a way to, get an idea of a possible target, at least for a potential pullback. If we were to pull back from here, the next long, lows to highs, puts us kind of right on top of the previous resistance. Another thing to note, if I pull up the calendar here, we've got options expiration next Friday, which also is futures expiration, which means that tomorrow is futures rollover. So what you'll see happen is the volume will flow from the June contract. You'll see more volume in the September contract. That typically happens today, Thursday, or Friday before the entire week before the expiration date. So this next week can be a little bit strange just because you've got two contracts going, the June contract and the September contract. Some people still have positions on in June. Most day traders have moved to trading September. That's now considered the front month. And then you got this continuous contract that, kind of adjusts after expiration. So make sure that if you're looking at a chart and you've got your trade ladder, make sure that they're the same contract. Otherwise, you'd be looking at a price here on June, and your trading dome might be September, and the prices aren't going to line up. And if you go to place trades, you end up, shooting yourself in the foot there. So keep that in mind. Next week, be a little cautious just because you've got the two contracts. But let's run through some trades from this week. Really, really great week. On Tuesday, towards the end of the live trading room, it was kind of a slow start to the day. I had a couple of trades, and then right towards the end of the room, we got in a really nice short. Had this double top up here, and that kind of set the tone for the week. Took a short at 49s and rode that all the way down. The negative 23% target was of 45s, and then made it all the way to the negative 61.8 before getting a bounce. This sort of double top, an hour into the day, setting up into a short. That kind of set the tone for Tuesday, Wednesday, and Thursday because there were some great short setups all 3 days, today included. And so if we go to Wednesday, it was a little bit earlier in the day, kind of right off the open, but another double top set up in a great little short setup right at 54 and a quarter. If I've got an odd number, when I draw my fib, I'll just round down and then add a tick if I'm looking for a short, and round up and add a tick if it's a long. So then in this case on Wednesday, Nice short setup at 54 and a quarter, and then just wrote it down. Again, first target, the negative 23% line, and then just trailing my stop above these swing highs until we get a break, which we did down here. And so another good 5-pointer early in the day. Now on the ES, we turned into a pretty nice trend day on Wednesday, but you'll notice that as we started to rally, there really wasn't a good pullback. The market didn't pull back into a full retracement, so it was kind of hard to get into a long on Wednesday. A little bit later in the morning, we had a couple really nice setups on the 512 here, and then another one right before the breakout. So there were a few opportunities, but we didn't get that bigger pullback. And so what I did, I looked at, I always like to look at the NQ, the YM, and the ES. And a lot of times, one of the three will be a little stronger, or one of the three will be a little weaker. Well, on Wednesday, the NQ did make a larger pullback. And so if we draw from lows to highs, we see a nice pullback to the 50%. Now, when we have a big level like this, rather than just taking a blind limit, I prefer to let this larger level trade and then come in here and draw up the first setup after that larger level. So if you think about this bigger setup here, this bigger long, this is visible on a 15-minute chart. So we'll call this bigger 7167 long the 15-minute. And then this little guy here, 7172s, that is the first setup on the 512 in the same direction as the 15-minute. We're just zooming in a little bit and taking this first setup off of the bigger level. I also like to draw up the opposing, make sure that we can break through that, and we did. Just all you need is to break it by a tick, just to kind of confirm that the long is in play. And then once you get in, just trailing stops, trailing your stop on the way up. And again, super cool little trick. Instead of, as we get up here into highs, see these little 2-candle pullback, 4-candle pullback. Instead of your stop is here, you get this nice run up, market pulls back 2 candles, gets a little bounce. Instead of moving your stop up underneath this swing low right away, wait for the market to break this swing high. So I'm leaving my stop here. Market kind of gets a couple of legs lower. Then as we break out again, breaking this swing high, then I'll move my stop up underneath this swing low. And so that keeps you in the trade longer. And then just keep trailing your stop on the way up. And then eventually, the market can't make a new high and pulls back, and then you get taken out a little bit higher. Actually, it was this guy here. Notice we pulled back, made a new high. That gave me the opportunity to bring my stop up once again. This was right at the close, and then so that's how you can kind of ride these trades for quite a long time. And you'll notice, a long time in one trade, but I would prefer to have one trade that I milk for as much as I can, as opposed to try to get in, get out, get in, get out 5 or 6 times over the course of a move. When you have a bigger, what I'm calling the 15-minute level here, you can, even if you enter on the 512, you can still use the target of the 15. So you got this bigger negative 23 up here. You can use that as the target, and I actually ended up taking off most of the position here, just because we were inching closer to the end of the day, and I don't like to have positions on into the close. So that's another helpful little trick. And then today, back to the ES. Another great short setup. double top. So wasn't the exact same price as a double top, but we did trade at highs twice. So drawing from highs to lows. Now notice we did not make it all the way up to the 50%. I actually had my order 75s and a quarter, rounding down, adding a tick. We touched it, but didn't trade through, and thus I was not filled. So taking the first setup after the larger 15-minute in that same direction, the short, that's all you really need to do. So again, making sure that we don't just stop at the opposing. So you can see we broke the 61.8 here, and then set up nicely, traded right at the short, and then again just trailing your stop down. Again, in this case, waiting for this swing low to break, and then because it was a little bit bigger level, like this 15-minute up here had a little bit larger target. Scaling out, you can use a couple of different. Let's say you've got 3 contracts, for example. You could have 3 different profit targets, but you could also have multiple different stop points. So your first stop point might on one contract. So this guy here was a 73 75s, and then this first little negative 23% target was only a point and a half away, 72 50s. So let's say you took one off there just to lock in a little profit. So now you got 2 contracts left. Maybe you trail the second contract above this swing high because we did break the previous swing low, and then you get this little bounce and you got taken out. And leaving that third stop, maybe back up one swing high prior, or even trailing the full next retracement. So putting it just a tick above the 61.8 on this drawing, you can trail the next full retracement, keeping your stop up above the 61.8. So that way you have kind of an aggressive exit point, and then a more, you got a couple more contracts left. And then you also have a trail stop that is, 1 might be aggressive, and then 2 might be a little bit more conservative. So, as you get into multiple contracts, you can do a lot of really cool stuff that allows you to stay in these trades for, big moves. I mean, by the time this thing came down and eventually got this V reversal and broke the swing high, I mean, you were another 6, almost 7 points down. So, pretty good day of trading. I mean, just in that trade alone. And then what I did, we made this V reversal, and I drew up from the previous major swing high down to lows, and noted that we broke the 61.8 by a couple of ticks. And so you can either take the first long now in the new direction, like so. Not only did we break the 61.8 of the short, but we broke the little swing high. So taking the long down here and trying to ride that guy up, I mean, even 68s to 71s, another 4 points, 3-4 points. And then, you can use that same anchor point of lows and come up here to the next high, and you can use 69.50s as another long entry and a way to get into another big push up. And so even though the market is kind of, if we look at today, zoom out a little bit, even though the market is generally today, at least in the morning, kind of made this push lower, and then into the close we got a rally. I mean, you can still take long setups in the context of a daily candle that ends up bearish. So by utilizing the 512 tick chart, it's really helpful. It's a really helpful way to be in trades with the most current momentum. So as we head into tomorrow, again, watch out for futures rollover. Might be a few screwy things that happen. We are at this negative 23% target. I won't be surprised if we get a little bit of sideways action here for a couple days, maybe a little bit bigger pullback. But we could also just go sideways for 1 or 2 days and then start shooting up through these highs. So I've got this 27, we'll call it 90s marked, and then I think it was 20, uh, just a couple points above that. The next one, 2807s, is the next high. So I'll throw a mark on that one, and I'll keep my eye on these two levels. And then the next stop from there is all-time highs, at least here in the ES. So pretty good week. You don't need to take 10, 20 trades a day. 2, 3, 4 trades, even 5 or 6 trades is really all you need. And even just a couple of contracts, you can really take a lot out of the markets by just having a process and managing your positions the same way each time. You following that process every single time. So if you're interested in the live trading room, we do that on Tuesdays. You can check that out over at emoneymind.com. And I hope everyone has a great rest of their week, a great weekend, and we will talk to you soon. Thanks and take care.